Imagine a stock that was almost ignored a few years ago, and now suddenly it is sitting right in the middle of the biggest technology revolution in history. Artificial intelligence. That stock is SMCI, Super Microcomputer. And today the question is very simple, but extremely important for every investor watching this video. Can SMCI actually make investors rich by 2030? Or is this just another AI hype cycle that will eventually cool down and punish late investors? Before we go deep, I want you to think honestly for a second. If you had $1,000 today, would you invest it in SMCI or would you wait for a better opportunity? Because this simple decision often decides who benefits from big market trends and who enters too late. Now let's understand SMCI in the simplest possible way. SMCI is Super Microcomputer, a US-based technology company. It builds high-performance servers, storage systems, and full data center infrastructure. But here is the key idea most beginners miss. SMCI does not build AI chips like Nvidia. Instead, SMCI builds the physical systems where those AI chips are installed and used at massive scale. So think of it like this. Nvidia builds the engine of AI. SMCI builds the machine where that engine actually runs. And in today's world, AI is not small anymore. It runs inside massive data centers across the world. That is why companies like Microsoft, Amazon, Google, Meta, and large AI startups depend heavily on server infrastructure companies like SMCI. So whenever AI demand increases globally, SMCI indirectly becomes part of that entire growth cycle. Now let's talk about the stock reality. SMCI has already seen explosive growth during the AI boom. It was not always a mainstream stock, but AI changed everything very quickly. Investors suddenly started paying attention because demand for AI servers increased at a massive scale. But here is something very important to understand. This stock is not stable. It is highly volatile. It reacts very strongly to news, earnings, expectations, and market sentiment. For example, recently when SMCI announced large-scale fundraising to expand AI infrastructure, the stock reacted sharply and dropped heavily in a short time. This shows one clear thing. SMCI is not a slow and steady investment. It is a fast-moving AI stock that can go up quickly, but also correct sharply. Now let's talk about why investors are still interested in SMCI, despite this volatility. First reason, AI demand is still growing very fast. We are not at the end of the AI cycle. We are still in early to mid expansion phase. Every major company is spending billions on AI data centers, cloud computing, and training infrastructure. Second reason, SMCI is indirectly connected to Nvidia's ecosystem. Whenever Nvidia GPUs are deployed at scale, they need server systems, cooling, racks, and integration. SMCI provides that entire hardware layer. Third reason, real business growth is already visible. The company has reported strong demand from AI-related customers, and order pipelines have expanded significantly in recent years. So this is not just hype. There is real infrastructure demand behind it. But now we must also talk about risks in detail, because this is where most retail investors make mistakes. SMCI is not a one-direction stock. It comes with serious risks that you must understand. First risk is valuation risk. When a stock rises too fast, expectations become extremely high. And if growth slows even slightly, the stock can correct very aggressively. Second risk is competition. SMCI is not alone in this industry. There are multiple global hardware and server companies competing for the same AI infrastructure demand. Third risk is margin pressure. Hardware business is very different from software. Costs are high, competition is intense, and profit margins can fluctuate over time. Fourth risk is dilution risk. When companies raise large amounts of capital through equity offerings, existing shareholders can face dilution, which can impact long-term returns. Now let's move to the most important part. Price expectation and 2030 prediction. As of recent market conditions, SMCI has been trading in a volatile range roughly between $30 to $40. But the exact price is not the most important thing here. What matters more is the long-term direction. Now let's talk about 2030 prediction. And I want to clearly say this is not financial advice. This is only a scenario-based analysis based on current AI trends. In a conservative scenario, if AI growth continues but competition increases and margins stay under pressure, then SMCI could potentially deliver around 2x returns over the long term. In a balanced bullish scenario, if AI expansion continues strongly and SMCI maintains its position in the AI infrastructure supply chain, then we could potentially see 3x to 5x returns by 2030. Now the aggressive bull case, if AI demand becomes much larger than expected, data center expansion goes global at massive scale, and SMCI keeps winning major contracts, then SMCI could become a multi-bagger stock. And in that case, early investors with patience could see life-changing returns. But there is also a bear case. If AI spending slows down, competition increases, or margins shrink, then SMCI could underperform or stay sideways for many years. So the truth is very simple. SMCI is not a guaranteed wealth creation stock. It is a high-risk, high-reward investment. Now, my personal opinion, I think SMCI is one of those stocks that can surprise both sides. It can deliver strong upside if AI continues growing aggressively. But it can also correct heavily if expectations change. So the real game is not just buying the stock, it is about timing, patience, and risk management. Now I want to ask you something very important. Do you think SMCI is still early in the AI revolution? Or do you think most of the big move has already happened? And would you prefer high-risk AI stocks like SMCI or safer big tech stocks with slower but stable growth? Comment your thoughts below. And if you want more deep stock breakdowns like this, stay connected.